What's up guys, Ben here and welcome to Motivation to Invest. We are in the age of disruptive technology. Airbnb disrupted the hotel industry, Uber disrupted the taxi industry, and even Tesla is disrupting the automotive industry. Companies like these are true growth companies, which create their own market by disrupting stable industries which have been around for many years. For example, a stock like Tesla is up by over 5x in just a few months. This means if you would have invested £10,000, you would have made £50,000 in just a short period of time. So on many of my previous videos, a lot of you guys have commented and said, Ben, what's the next growth stock? What's the next disruptive technology stock which is going to transform the world? Well, there is one that got me really excited recently, and that is called Lemonade Insurance. It IPO'd in July 2020, just a few weeks back. And this stock has the potential to be a 10-bagger. Now, insurance is one of those industries which has been the same for hundreds of years, but Lemonade plans to disrupt it by being a digital insurance industry which uses artificial intelligence. So could this be the next growth stock in the decade, and have I been buying shares in it? Well, in this video, we're going to find out as I deep dive into Lemonade's business. Without further ado, let's dive in. Welcome back guys to Motivation to Invest. Before we get started, it would really mean a lot to me if you guys can give this video a big thumbs up. That helps out the YouTube algorithm, which allows me to create more great content like this for you guys. In addition, if you want more investing tips and exclusive stock picks, which I personally am investing into, then you should definitely subscribe to this channel and turn that notification bell on. With that being said, let's get into the video. So what makes Lemonade Insurance so special? Well, traditional insurance companies have an unfair system. When you wish to make a claim, that money has to come out of their profits. Thus, they have vested interest not to pay you your claim. Then even if they do pay you your claim, your insurance premiums go up and it costs you even more. Thus, it's counteractive for you to even try and make a claim. To me, the whole industry is a farce. Whereas Lemonade uses behavioral economics to create a fair system. You pay a fixed monthly fee, and any extra cash which Lemonade has left over from not paying premiums, it donates to a charity of your choice. Thus, Lemonade, the company, doesn't have a vested interest to not pay you your claims. But it also helps their business be profitable, because the way they look at it is, if you are trying to defraud the system, you're also defrauding the charity which you wish to donate to. This is socially responsible business 101. And companies with ethics and morals are becoming increasingly more popular. Now you may be saying, Ben, that all sounds great, I'd love to help people, but what about the business? Does it actually benefit the business to be helping people and helping charities in this way? Well, the answer is yes. No one ever shares boring insurance content on social media. You never see a blog post about health insurance or life insurance go viral. However, people always share causes, charities, and good deeds. We've all had those petitions or marathon running donations sent to us by friends asking us to help out. People love to share content about great causes they are helping out with. For example, let's say somebody, we'll call her Sarah. She signed up to Lemonade Insurance. She chose a good cause as, let's say, saving the whales. Now then she shares this to her friend and says, look, I've signed up for this insurance company and I'm also helping to save the whales. Do you want to do that as well? And thus it goes on and on and on, and the content goes viral. This is very low cost digital marketing, which is a real USP for Lemonade Insurance. But that's not even the best part. Lemonade uses artificial intelligence to execute the claims. Gone are the days of time-consuming phone calls and mountains of paperwork. You simply log on to Lemonade's app, Speak to the chatbot and your claim is paid within 3 seconds.
Buying insurance, you're doing something wrong. So it's just a friendly chat that you go through, answer a couple of questions, and you're done. So all of the underwriting, all of the binding of the insurance is done like that.
So no human, does a human being internally ever review what the bot has decided?
Well, where the humans come in is where claims get paid.
Okay.
There we have bots that pay claims as well. 1/3 of our claims are paid algorithmically within 3 seconds of submission. So literally, you're making a claim, you chat to our chat box, it's called AI Jim. You tell AI Jim, hey, I got my laptop stolen, this, that, the other.
Right.
And in 1/3 of the cases, the money is in your account within 3 seconds.
The beauty of using artificial intelligence, apps and online services for insurance is that this keeps your costs low. You don't need an office full of hundreds and thousands of employees and high overheads. This means higher profit margins and thus higher profits and higher cash flows for investors. But I know what you're saying, Ben, this sounds too good to be true. Do the numbers stack up and is the business profitable? Well, let's dive into the numbers and find out. Right guys, so diving into the numbers here. As it's a newly listed stock, there's not as much data as there would be with other, more established companies. However, what we can see is the revenues have increased massively by over 430% over the past 4 years. However, the negative from this is the company is still not profitable, losing approximately $121 million in the last year. Overall, I think Lemonade is a fantastic growth company with great potential to disrupt the insurance industry. However, there is a big elephant in the room. The company is still not profitable and has only been around a few years. This makes it extremely risky to invest in, especially if you're valuing it from a traditional standpoint, such as Warren Buffett's style. In addition, when a stock first IPOs, there is a lot of excitement around the business, thus the share price rockets to very high valuations. So have I bought shares in Lemonade? Well, at the moment, I've not bought shares in the company. However, I'll be sitting on the sidelines and watching the stock very, very closely. At the moment, that valuation is still a little bit too high for my liking. I'm hoping the excitement goes down after the initial IPO and I can get in at a better price, around $40 per share. This will help to lower the risk with investing into this digital insurance company. The plan is to avoid a WeWork style disaster, a company which IPO'd and then crashed and went bankrupt disastrously. But that's just my opinion, and remember guys, this is not financial advice. So what are your thoughts on Lemonade as a business and as a stock? Do you think this has the power to disrupt the insurance industry and change the world as we know it? Let me know in the comments below and I'll join in the discussion. Also, if you enjoyed this video, go ahead and give it a big thumbs up. That really helps out with the YouTube algorithm, which allows me to create more great content like this for you guys. In addition, if you want more investing tips and exclusive stock picks, which I personally am investing into, then you should definitely subscribe to this channel and turn that notification bell on. With that being said, I'll see you guys in the next video. Invest safe.